I'm Matt Bishop with NAREIT.com here at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is Roger Waesche, President and CEO of Corporate Office Properties Trust. Roger, thanks so much for joining us.
Thank you.
Now, what are you seeing in terms of asset pricing in your core markets, and do you expect your company to be either a net seller or acquirer through 2016?
Sure. So pricing remains very strong for office product in the markets that we operate. There are two things underpinning that. First, strong fundamentals, and then secondly, strong capital markets. On the property fundamental side, supply is very benign and demand continues to grow. And on the capital market side, debt is very much available for borrowers, and underwriting is very positive, along with debt spreads. And of course, treasuries, while a little bit volatile, is historically very low. In terms of COPT, we made two very compelling opportunistic acquisitions in 2015. Since then, we've been a seller. So we've sold $154 million worth of real estate this year, and we have another $250 million in the queue that we'll sell later in 2015 or into 2016. We won't be an acquirer for some time.
And at the end of October, your company announced two build-to-suit developments in Ashburn, Virginia. What are your expectations for new office development in 2016?
Right, so development continues to be the engine of growth for our company, the value creation engine. Looking backwards real quick, from 2012 to 2014, we averaged 1 million square feet of development leasing a year. And as we look at 2015, what we've done year to date, plus our pipeline for the balance of the year, we think we'll get close to that number in 2015. Importantly, we have a shadow development pipeline ranging from 800,000 to 1.5 million square feet. That's where we're working with tenants on specific build-to-suits. And so we think some of that will get realized, and we expect to have very strong development starts and leasing in 2016.
And lastly, what impact are you seeing, or do you think mobile technology, telecommuting will have on the demand for office space?
Well, real estate is becoming more dynamic as it adapts to a connected world. Mobility and technology have had an impact on our business. They've had a little bit of a dampening influence on the demand for office space. But when you think about our company specifically, we have two parts to our business. The first is our strategic tenant niche, which represents 75% of our company. And that part of our business is where we cater to the U.S. government and the defense intelligence community. So the work that's done for that part of the business has to be done in an office, and generally speaking, it's done in a secure office. So we've really had very little impact from that. On the second part of our business, which is 25%, which is our regional office portfolio, where we cater to traditional commercial tenants, we're starting to see the pendulum swing backwards. That is, things like culture and collaboration and teamwork and productivity are becoming very important influences to the success of a corporate enterprise. And so having the team together in one location is starting to be more important than having off-site working models.
Roger, thank you so much for joining us.
Thank you.
For more from REITworld 2015, be sure to visit REIT.com.